So when we talk about political risk in Europe, Wei Li, I know that you've done some work on this, and you talk about your BlackRock geopolitical risk dashboard on European fragmentation, and it's jumped over the month of August. Tell us a bit about this dashboard. What does it measure? What clues is it giving you?
It very much monitors to what extent market focuses on key geopolitical events, and also to what extent broker research report as well as news reports such as Bloomberg itself, to what extent they talk about geopolitical events. So we have identified a top list of events that could drive markets, and we monitor individually all of them as well as on an aggregate basis. So specifically, exactly as you said, throughout the course of August and going into September, European fragmentation as one of the top geopolitical events has been on the up, as evidenced by our indicators.
And what about flows in Europe, with that as the backdrop, with that sentiment around populism very much evident and dominating news flow to some extent? Well, perhaps not dominating actually, but certainly very evident. What are the flows into Europe looking like then, Wei Li?
European equities is currently the least owned exposures based on
pretty unloved,
almost on a steady basis throughout the course of this year. Fragmentation sentiment does not help, especially around what's been happening in Italy, despite recent improvement, as well as growth stagnating, very much not recovering at the same pace as what we have seen towards the end of last year. In fact, based on our in-house indicator, we continue to see growth downside potential versus consensus, and that has not helped investor sentiment. And global trade tension facing off to the US, as well as Europeans' linkage towards the broader emerging market, has also weighed on sentiment, and because of all of that, very unloved, very underowned.
Very underowned. Let me ask you a little bit about that growth. You talk about growth going sideways. We've got a graphic that shows the ECB expectations, the expectations of economists around the ECB and what we're going to see there. And there is some expectation amongst economists that the depo rate will be increased by September 2019. There are concerns about global trade, about Italian politics, about emerging markets, but they still see Draghi pressing ahead with tightening of European policy. Do you see that, given the risks we've talked about, the slower growth and populism?
I think from now until September 2019, that is a long time in the time horizon of market. A lot of that will be growth dependent. A lot of that will also be dependent on the election outcomes. So because of all of that, it's way too early to say if September 2019 is the date to watch out or not. What we do know is that rate hikes won't happen until after summer next year, and we'll have to evaluate based on our growth indicators as well as inflation indicators what should be the right path at that point.